Hey guys, welcome to a new video. Today we're going to be looking at trading fees. Now, trading fees can play an important role in algorithmic trading. Compared to retail traders, algorithmic traders tend to get in and out of positions very quickly, and fees can quickly eat into their P&L. So today we're going to be looking at a Python example of how you can properly calculate your trading fees to ensure that you are never losing out on your profit. Let's dive into it. So the first thing that we're going to want to do is import our necessary libraries. We're going to be importing the CCXT, Pandas, and Crypto Pandas library for today's purpose. Afterwards, what we're going to do is initialize an exchange object using the CCXT OKX class. Today we're going to be using OKX, and we're going to be using it in the sandbox mode. Once we have created this exchange object, we can wrap it up in a CCXT Pandas exchange so that we can work efficiently between CCXT and Pandas. Once we have done that, we can just load our markets and we can see all the available symbols that are trading on OKX Sandbox, such as BTC SGD or BTC AED. So in today's example on how to calculate trading fees, we're going to be looking at a few trades that we made in our sandbox environment on BTC USDT, BTC USDT perpetuals, and ETH BTC. Now, the reason why these trades are interesting is because they represent a mix of spot, futures trades, as well as trades on symbols which are not quoted in USD. So calculating these fees can become a little bit complicated, as we're about to see. To fetch these trading fees, what we're going to do is loop over our various symbols through this for loop, and then append our new trades to our data frame. We're simply going to filter our data frame for columns of interest, such as timestamp, the fee cost, the fee currency, the symbol, the side of the trade, the price, and the amount. And now that we have got these trades, we can see already a few interesting things. What we notice is that the fee currency is not always designated in USD, and this is going to become a bit annoying, as we're going to see. At times, it is denoted in BTC if it is a buy order, for instance. Sell orders on BTC USDT, the fees are paid in USDT. Another somewhat annoying circumstance is what happens when we start trading on non-USD quoted assets, such as the ETH BTC symbol. And what we notice here is that we are either paying fees in ETH or in BTC. And that means that we're going to need to do some form of conversion to determine how much fees we were paying in USD equivalent at that moment in time. Now, a naive approach to calculating fees would be simply to multiply the price that we paid in fees versus the price of the asset so that we could get the USD equivalent of that fee. So for instance, here we paid 8.4 to the power of minus 7 BTC on this trade. And we could think, okay, all we need to do is multiply it by the price of that trade, which was 118,000, to get the USD equivalent. And the way we would do this in Pandas is simply to multiply the fee cost versus the price for all of the trades where the fee currency was not USDT. And so as we can see here now, we have a few fees which have been properly calculated, such as this BTC USDT buy trade, where we calculated a fee of 9 cents. Our USDT based trades still are properly calculated. So here we have a total of 70 cents and 20 cents here. However, we notice that we haven't solved the issue when it comes to the non-USDT quoted assets. As we can see here, our trading fees are 1.8 to the power of minus 7, which is, of course, far too low. And that's when we come across this annoying circumstance where we need to determine how can we evaluate the price of our fee at that moment for something which was not traded in USDT. And that's why we're going to do a little calculation here based on open, high, low, close volume. So what we're going to do basically is just get the open, high, low, close volume price for BTC and ETH in USDT for the time span of these trades. And then we're going to merge that data back onto this trades data frame, and that's going to allow us to determine what was the trading fee that we paid here, but in USDT. The way to do this is simply to go through the ETH and BTC USDT symbols, and then using a while loop, we can go from the first time of our trades all the way until the last of our trades and gather the open, high, low, close volume. We concatenate the open, high, low, close volume into a single data frame, And as we can see here, we get a data frame containing 78,000 rows where we get all of our open, high, low, close data spanning from mid-August to mid-September for both BTC and ETH. Now that we have this data, we're going to need to merge it back onto our trades data frame. And here we also get a few more complications. Because our open, high, low, close volume, for one, the symbol is noted as BTC USDT or ETH USDT, whereas for our trades, the fee currency that we're going to have to merge it on is in BTC or ETH. So we're going to have to do a string manipulation where we're going to simply replace the USDT ending with an empty string so that both of these columns now match each other. We're also going to rename the symbol column inside of our open, high, low, close data frame to fee currency, and we're also going to rename our timestamp column to timestamp 1 minute for a good reason. And the reason is that our trades happen every millisecond. And so our timestamp inside of our trades data frame can be to the millisecond precise, whereas our open, high, low, close volume data is at best at 1 minute granularity. So to be able to merge these two columns, what we're going to do is we're going to add to our trades data frame a timestamp 1 minute column, which is basically the time of the trade rounded to the highest minute. And now that we have created this new column, we can simply merge both data frames and have a look at the output. Great. So we can now see that we have two columns which have been added, the timestamp 1 minute column and the close column coming from our open, high, low, close data frame. And this is really what we want because now we have a single price reference that we can use to determine our trading fees if it is in BTC or in ETH. So even though here, for instance, the symbol was ETH BTC, we know what was the original price in ETH USDT. And so now it's going to be quite easy to calculate our USDT price fee. It's simply going to be the fee cost where the trading asset is trading already in USDT. And if not, we're going to have to take that fee cost and multiply it by the close price of that asset in USDT. So let's go ahead and look at how this new fee USDT column looks like. And it actually looks really good. We can see here that we have multiple trades here. Where the fee was either 9 cents, 1 cent. We had a few very big trades here of 0.08 BTC where we paid a total of $9. And then we have other small trades here on ETH BTC where the fee was around 90 cents or 10 cents. Perfect. So now if we want to get the final value of how much we paid in trading fees, it's as simple as just doing a sum over that column. And there you have it, $20 over the course of 13 trades. Now, this is our way of calculating trading fees. Maybe you guys have a different approach, and we would be curious if you could leave us in the comments how you would calculate your trading fees personally. Otherwise, we post content regularly on how you can improve your algorithmic trading. And if you are interested in using the tools listed in this tutorial, there's a link in the description below towards Crypto Pandas. And if you are also interested in taking your algorithmic trading to the next level, we also offer Crypto Pandas Pro, our proprietary solution for making algorithmic trading even easier. And at Sigma Quantify, we also offer consulting services for enterprises who need custom-made tailored solutions for their specific trading needs. Thanks for tuning into this video, and we will see you in the next one.